Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. As you hear, I've got a sore throat, so bear with me here. Today, we had CPI data released at 8:30 in the morning, and the data year over year and month over month came in weaker than anticipated. Now, keep in mind, the CPI data is different than the PCE data. The PCE data is what the Fed prefers for gauging inflation. Now, with this weaker CPI data, in 2 weeks, we're going to be seeing what that PCE data is going to be. But keep in mind, the CPI data weights housing nearly 2 times more than the PCE data. So if you're like anyone else here living in Florida and other regions of the United States, housing costs have been coming down. So likely that is a major cause for the inflation numbers coming in weaker than expected. Regardless, the market's ripped. So let's get into the heat map, and I'll show you some of the things that happened today, especially with the indices moving higher, particularly the semis. Now, the Dow Jones is down 0.7%. That's because UNH is getting hit hard. United Healthcare is way down with their CEO leaving, pulling down the Dow Jones average. NASDAQ is up 1.83%. S&P 500 is up 0.66%. U.S. oil is up 2.71%. Great move on oil. We'll look at that chart here in a moment. Gold was basically flat, up 0.43%, and Bitcoin is up 1.89%. We see here, though, on the chart, we got Nvidia up 5.91%. Really, the semis led the way today. And what you want to have when you have markets pushing higher, you want to have the semis really leading that charge, because that usually leads to a more sustained rally in the markets. However, with that CPI data and what I mentioned earlier about the housing weighting in that data, I think the PCE could reverse that inflation data here in 2 weeks, which then could provide selling pressure in the markets. All right, so let's jump into the spiders and take a look at the price action today. Over the last several weeks, we've been watching this parallel channel and seeing how price reacts within it. Now, today with that CPI data, we ripped through this channel now. And so now SPY is on watch for a confirming move above this parallel channel. This will be important to watch for tomorrow if we get a move above this candle, because then this support area will be then higher up on the down sloping top portion of this parallel channel, roughly at 583.28. Next resistance moving higher for the spiders is 598.25. We could be moving up there. Again, with this lower CPI inflation data, we certainly could be moving up higher in the near term on the SPY. So keep an eye on that. That's bringing euphoria to the markets. Investors, retail investors also are starting to pile in a little bit more into the markets, as they typically do when markets top. So beware and be cautious with that price action in the near future. Into the Qs, another great move on this chart too. Now notice the all-time highs are right over here. We're really not that far away from all-time highs. Right now, we're about 4.74%, which is located right up here at 540.81. So be watching this on the Qs, but also I'll bring your attention down to the bottom of this screen. The RSI data is now sitting right there at 70, telling us that we are now short-term overbought. And it really doesn't, I don't need this indicator to tell me that. I can just see right here on the chart. You can see here within the previous 26 trading days, we have moved up 28.5% on the Qs, averaging over 1% a day, even with these pullbacks that we've had. So look at all those gaps in the push higher. The markets have certainly been resilient moving up. Quite remarkable achievement in the Qs. Now in the SMH, we also are very close to where the highs were put in for the spiders, which was right here. If you recall, I've talked about this February 20th pivot date area right here on the charts, which currently the SMH is about 5.67 points away from that area as far as percentage points. So that is very close and attainable. And we're going to get into a couple semiconductor charts here later in the show. And I'm going to show you why the price action is moving up as nicely as it is on the SMH. So for now, for the bulls, what we want to see on SMH is we want to see a close here and then a following close above. That way we can lead into some sideways consolidation with this trend line providing support. Now, it's important for everybody to recognize too, we're currently in a cycle period, one of the newer ones. If you recall, I called April cycle for being a very negative influence on the markets. Well, this new cycle that takes place starting May 15th, we're actually going to have neutral to slightly positive bias on the market. So what I anticipate from that after a big move up in the markets is we likely will start chopping sideways and moving sideways, consolidating to try to go higher. Also, when these cycle dates come and there's really no clear, solid indication as this is going to be extremely bullish or this is going to be extremely bearish, usually those indicators often change momentum and direction of the stock markets. So far, we're moving straight up into that cycle date. So we likely will either pause, consolidate, or either have some sort of slight pullback with consolidation that could lead to more upside. But that could change, especially with the PCE data, as well as my next June cycle date, which is a lot more negative. So be keeping that in mind for any longer term investment opportunities. All right, so back into the charts. There's the SMH. Let's take a look at Bitcoin. Bitcoin yesterday had a very interesting day. We tagged the resistance right up here on the inclining portion of the 50% of this parallel, but then we came down also and kissed this yellow support trend line. All in all, it really was just a sideways day, but ultimately testing both sides of support and resistance, weakening both. So still maintaining bullish consolidation. If we were to break down from this trend line, first support is going to be 96,628. To the upside, we have the top end of this parallel that is certainly now within reach, right around 115 and $900. Into gold. Gold also had somewhat of a positive day as we recapped on the heat map. But price action really just kind of chopped sideways from yesterday's close. So that's just a pause day, much like what we saw right here. I do not anticipate gold to start rallying back up. I do anticipate more sideways chop and then a further down move, at least to this $3,100 level on the charts. Into silver. Silver is doing one heck of a job consolidating right here. If you recall, I've said we need to consolidate here so that we can have a chance to move higher. So let's just take a look. I've said that $36 to $37 figure for a while, and this is a little education for you on the charts. Here, when you have an inverse head and shoulders pattern, if that pattern breaks, and we see here left shoulder, a head, and a right shoulder. So we have an inverse head and shoulders pattern. Let's just hypothetically say tomorrow this silver chart breaks out and starts confirming above this trend line. So we need several steps. We need a break above, then a confirm above, and then that measured move really becomes more clear in distance. And really, when I was being conservative, saying $36, $37 for price on silver, because this measured move takes us all the way up to $38.94. It could be an incredible move on silver. Lots of resistance to get through, though, and also several steps yet to take place on the chart to make sure that that triggers that inverse head and shoulders move on the charts. Into U.S. oil. U.S. oil did come back and is testing that resistance area that we've been watching so closely over the past several weeks. Right now, we are closing above that trend line. We'll see tomorrow if we confirm above. If we do, game on for oil. That makes it more bullish. Even though we've been extended in this situation, you can see on the RSI, we are not overbought in the near term on U.S. oil. Into nat gas really just had a little pullback day on the charts, and you would expect something like this with a nice vertical move that we've seen. So I expect more consolidation, maybe even a pullback here to this support trend line right around $3.60 before excelling back up higher to $4.18. Now into the 10-year yield, this is really interesting. And especially when we were talking about CPI data and PCE data, the Fed will likely be discussing cutting rates in June for their meeting next month. The Fed expectations and the percentages for them to cut in June are not happening. It doesn't look, as of right now, it doesn't look like they will have a cut in June. However, when you look at the 10-year yield, the 10-year has moved up significantly since the last couple weeks of trading. And really, it's in essence like a rate hike on the market and the economy. So Jerome Powell will be digesting this information with the 10-year yield, the CPI, the PCE, and I think the percentages are actually going to shift and start increasing for a potential 0.25% basis cut in June. Watch in the coming weeks the Fed watch tool to see if those percentages change. But with this action on the 10-year that you see coming in right here, look at this. In the past, let's just see in the past 9 trading days, we have now gone up 0.425% on the 10-year yield. That's almost 2 rate cuts that we were expecting to have a total of 3 this year. In actuality, these were rate hikes almost for 2 rate hikes. So with 1 rate cut, that's not even pulling us back down to the bottom where we were at the beginning of May. So the likelihood of a rate cut starts to increase the higher the 10-year yield goes. As a 10-year yield goes higher, our government will have to pay off our debt, which is currently over $1 trillion, and refinancing that is not going to be very cheap. Into FSLR. Now, these are some market leaders today. FSLR did have some nice news regarding the reconciliation bill. Apparently, it's not going to be as bad or restraining as once was thought. And so this stock just ripped today. You saw it gapped up over this declining trend line. So that makes this area now support right down here around $170. And if FSLR continues to run, which I do believe there is a chance, even though it's overbought as can be right now, 78 on the RSI, there still could be a chance for us to tag that $200 level before we pull back and retest this area around 170. All right, into Coinbase. Coinbase was added to the S&P 500 today. And so as you see here, a lot of indices, and it's important to understand this too. Whenever a stock is either added or taken away from the S&P 500, there's a lot of ETFs that have forced buying or forced selling. In this situation, Coinbase is added into the S&P 500. So all of the ETFs that track the S&P 500 have to buy Coinbase. So it's a lot of forced buying in that stock, pushing price higher. Will these prices stay? It's really uncertain. Usually after an add to the S&P 500, there will be a few days of up days, but then ultimately that price will have to settle out too. A lot of investors that were in this from last week or even a couple weeks ago likely will be starting to take profits because this sort of move up almost 25% today. I would be happy to take profits. So as we see back here on the charts, we've got right here, we did close at 256.90. If we do move up over the next couple of days, resistance is at 270.61. Support is going to be down here on this trend line right around 240.55. Now, but on the bigger picture though, let me show you this here on the weekly time frame. If you notice, I've got several trend lines drawn, right? I've got a trend line from this pivot over through these pivots, and then we had a break above and then pull back. But then I also have this high pivot stretched over to this. So basically, this whole move right here is a big cup and handle pattern. Now, I don't really like the angle of this handle right here on the cup and handle pattern, but it's still all in all will qualify as one of those cup and handle patterns. Ultimately, the breakout that we had today broke above this declining trend line and this parallel channel, showing very good relative strength for the near term. Coinbase, it'll likely be in several weeks to several months, maybe even come up and start retesting this 346.90. If it does test this and break above, we are in store for a mammoth move on Coinbase. Again, that's several weeks or months in the future. It all depends on how the dust settles after the adding of Coinbase to all the ETFs, since it is now included in the S&P 500. Into Nvidia, another semiconductor that really led the way today. This is a significant breakthrough for Nvidia. Now, we haven't confirmed, we've just gotten back into this parallel, but that is very good news for Nvidia, having gotten out from the bottom of this trading area. And what that does is that frees up space. Granted, it can confirm tomorrow for Nvidia to continue moving higher up to 138.90, the next resistance level on the charts. Minor support is going to be along this trend line until confirmation is made, and then that trend line will become major support there on the charts. And that area is roughly 126 on the charts. SMCI also. Now, SMCI traded very similarly to Nvidia in the past. It was almost like the little brother of Nvidia, but we saw SMCI ripping today. I did have a day trade on this stock as well as FSLR. FSLR turned out good. SMCI did not turn out as good. It was a very minor loss, but the buying pressure was persistent. If we look through the 10-minute chart, look at how much annotation and drawing analysis I did throughout the day to try to get some good levels, but we just had simply a bull flag, another bull flag, and another bull flag. So we had 3 bull flags, no real good pullback, especially this was the only area that retested that parallel channel, still showing that parallel channel, I'll delete that line, you can see right here perfectly, price broke above, came back, retested exactly to that parallel channel, then excelled on its merry way. So what does this mean for SMCI? SMCI, like Nvidia, and more so SMCI because it's much lower on the charts than Nvidia. SMCI has a lot of room to run. We need to see a confirmation above this candle tomorrow. And once that happens, any pullback, as long as it remains within this parallel, is a buy-in opportunity for a move up higher. Initial resistance at 42.47, followed by this 50% area of the parallel, roughly at 53.04. And as a reminder, as long as time goes on, this level will also increase on the chart since that is an inclining parallel channel. All right, guys, that wraps up all the details today for trading the close. Thank you guys so much for watching. Again, apologize about the throat. Got some medicine, so I'll be right back at it tomorrow, sounding much better. You guys have a great rest of the day. Look forward to trading tomorrow. Thank you guys and take care.